Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview presentation. And today we want to talk to Revival Gold, and Hugh Agro, the CEO, is here with us. Good morning to Toronto. How are you?
Very good, Jochen. Great to be with you.
Yeah, thanks for taking the time. Always fantastic to talk to you. We like your company really a lot. I should say also I'm a shareholder of the company, just for disclosure reasons. And I think you guys are really developing one of the next gold mines. And this is exactly what we want to get an update from you. So I get the presentation started and let's rock it. The floor is yours.
Okay, thanks, Jochen. It was last in June that we spoke, and a lot has happened since then. Our customary disclosure here, and just to refresh you, Jochen, you recall we've got this 5,800 hectare land position in Idaho in the western United States. So this is becoming increasingly more important as we see some of the political turmoil in South America with Chile and Peru. Brazil with a leftist-leaning government on the rise, and of course what we're seeing more recently in Burkina Faso reminds us that geopolitically safe jurisdictions is a good place to be, and this is our property position. The main area of mineralization, of course, is along the Beartrack trend here, and then we've got this satellite deposit over here on the west side of the property position. I want to talk first about the Beartrack trend, the main trend of mineralization, and some of the drilling we've been doing there.
And you are owning that 100%, right?
That's correct. Yeah, big development over the last couple of months. We've completed our earn-in with respect to the left branch of the property, now 100% Revival Gold. So that will expand our exploration activities coming forward. And then on the Beartrack side, actually, we cut ourselves a little bit of slack in our arrangement with Yamana Gold to earn into that property position, giving ourselves another 2 years to complete all of the obligations there, and 5 years until we actually pay for the property. And you'll remember, we put all our money into the ground as part of that arrangement with Yamana, and we don't actually pay for the property until 5 years from today. And we pay on a per ounce basis down the road. So it's a really constructive win-win arrangement with Yamana. And our property position is in rock solid shape. So along that main Beartrack trend of mineralization, recall that we've got 5.6 kilometers of mineralized trend. It's open in the north, it's open to the south. And the area that we've been focusing on is right here in the southern area of the project called Joss, actually between Joss and what we call the South Pit area. You can see the conceptual pits on this cross-section figure, but the area that we're most interested in is adding grade at depth in the underground potential at Joss. And this is just one area of focus, but it's been a pretty exciting one for us.
Would that mean that you can start with open pit and then later on, let's say after year whatever 8 or 10, you can say, okay, now we go underground?
Yeah, so the first phase to this project will be a open pit heap leach aspect, and that will allow us to reuse the existing infrastructure on the site. You and I have talked about that in the past. It's a huge advantage to us, both in terms of permitting, but also in terms of our ability to keep the capital low. And in particular, when we're in inflationary times, this is a huge advantage. Beyond that, I think the next phase of this project is going to actually go underground, and I want to show you why. Here we are on that main Beartrack trend of mineralization in the shadow of the head frame, so to speak, in the shadow of the former heap leach pad, which is pictured here, and the leach ponds. And this is a perfect place to be adding ounces to the project, and especially underground ounces, which are complementary, higher grade, and boost our economics. So that's the area of focus that I've been talking about, and this is the area we've been drilling. And look.
Sorry, one question. If you can go back one slide, please.
Yeah.
Because I see here already like a highway, I see a lot of infrastructure like power. You have ponds here, etc. Can you use that all?
Yeah, I wouldn't stretch it too far to say it's a highway, Jochen, but it's absolutely road accessible to a town of 3,000 people. power line is in. You may be aware that we had a forest fire come through here through the summer, and none of our infrastructure was impacted. Power lines intact. All of the infrastructure you see pictured here, all intact. So yeah, we're in a very good situation here in terms of infrastructure.
Yeah, because I could imagine that saves then when you want to build a mine also some money, right?
Absolutely. Not just money though, also time. Because when you have an open footprint, that's where the permitting gets complicated, because there's different alternatives one has to look at. Here we know where the infrastructure is going to go for our first phase heap leach. It's there already.
Great.
I jumped very quickly to this long section view. Remember, we started out talking about 5.6 kilometers of mineralized trend. This is 1 kilometer at the southern end of the property position. It's a detailed figure. It's on our website for those who are having trouble reading it here. But this describes to you the kind of high-grade hits we're getting. And since you and I last spoke, we've been focusing in on this area right here, highlighted in yellow. You can see some of the grades and the intercepts. Last year, we ended the season with 14 meters of 12 grams. And we hit another 12 meters of 9 grams. And then this year, we've hit 14 meters of 6 grams, another 11 meters of 10 grams. It's really starting to hang together as an exciting area that's a sweetener for our existing mill resource at Beartrack-Arnett. And remember, these intercepts are all within a very broad mineralized zone, grading on average just under 3 grams, but having an extent that is in the order of 20 to 30 meters of true thickness. So again, kilometer of strike, high-grade core, 500 meters of vertical elevation difference here in this long section, and 20 to 30 meters of thickness in that halo of mineralization. This is shaping up to be a very big gold system.
Wow. Yeah, that's really a lot. And because I was just thinking about, you had on 12th September, you had 3.6 grams over 51.5 meters. Is that also somewhere here?
That is right here. That hole is 150 meters beneath one that intersected 110 meters of 4.3 grams. So you can see we're building vertical continuity as well as horizontal continuity. So this is looking at the deposit from the side. These purple areas are showing where we've got higher grade core. As we move out, it's still present in the mineralized zone. We've got a lot more drilling to do in here to define that all up. But we're starting with what we see here in this core area here and extending north and south. It's open. So this is really shaping up very well. And I think it's the reason why we've seen a lot of interest in our stock lately. Just finished the Colorado a series of conferences in December. We had 75 meetings, Jochen, over those 2 conferences in Colorado. Wow. A lot of interest from corporates, large institutional investors, and these things don't happen overnight. But getting that interest from these drill holes is key to our future development. And some of the rock, just to give your viewers a bit of a view here. This is a bit technical, perhaps, for the financially minded, but you can see some of the grades and the competency of this rock, which is critical for underground mining. We're in a vertical setting. We've got wide dimensions, and you can see some of these grades here. This figure is showing you about 19 grams over 5 meters in the core of the deposit from drill hole 240.
Gee, that's really a lot.
Now I'm going to flip to the other side of the property, if I can, because that's where we're drilling right now. We've got 2 drill rigs up at Haiti, and I've spoken in the past about the opportunity at Haiti. It's all oxide mineralization, so it doesn't require the heavy capital that the mill resource will require, but it's something we can leverage and we can grow. It's still open in all directions. At Haiti, you can see on the east side of this sectional view of the deposit that we've got open drill holes as well up here to the east. And we're drilling in those locations right now, 2 drill rigs underway, powering through that program. Illustrated in more detail here, plan view of the project area. Remember, we're on the left branch of the property position. You can see from the index map. So all these green dots here are target areas that we want to get to this year with our drilling to continue to upgrade and expand on the Haiti deposit as we head into the PFS due at the middle of next year.
How many meters would those green dots bring altogether?
So we're looking at between 2,000 and 3,000 meters of drilling in this area.
So it's more shallow drilling, but you do more holes like?
Yes, they're very shallow, 150 meters, 200 meters at most, all oxide material. In fact, Jochen, that's the other development since we last spoke. We've got our column test work back from this area of the deposit. You may recall we used an assumption of 75% recovery for this material in our most recent resource update. In fact, what we're getting is in the 92% recovery from this material from our column test work. So this material leaches very well. It's close to surface and it's open. And this is where we're focusing our energies right now as we continue to expand the deposit.
So that's like your payback hill.
Yeah. It's just one of the many payback hills we have, though. Here is an expanded view of the Arnett side of our property.
I'm sorry, it's not showing here. It's showing with you?
It is showing with me, yes.
It's not showing here. Okay. Maybe we have to go one further. Sorry for that.
No problem.
That's strange. Okay.
So there is.
Yeah.
That's
this
the
one.
That's showing.
That's fine. This one not. I'm very sorry.
Okay.
But I don't know why.
Okay, no problem. Yeah. But really, the main point of this this whole exploration program, really, we've got lots of those payback hills. We've got several target areas that we'll get to next year. If you can see the next slide here, I want to draw an analogy just so viewers can understand where we're going with this project. And I think this is very relevant to Europeans. Here we have pictured Beartrack, the main Beartrack trend, compared to what we know of the Kittilä mine, which is in Finland, Europe's largest primary gold producer. Very similar. Yeah, operated by Agnico Eagle, first-class company. Very analogous to what we're doing. Similar kinds of strike dimensions, starting with open pit, going into underground, similar kinds of grades, similar process. You know, a lot of people ask me about the process for our sulfide ores. It's the same process that Kittilä is using. And this mine produces somewhere in the order of 170,000 ounces a year of gold. It's operating at a little bit less than what we would expect to do from our operation and from the evaluations we've done. But similar long life, open pit going to underground process. And we think that Beartrack-Arnett is going in this direction. So as we think about where the future lies, this is a good idea.
Okay. Wow. Fantastic.
And in terms of next steps, I know this is always on folks' mind. Our drilling is now in the Haiti area, as I've said, with 2 rigs. We'll finish up that program here in the next month or so. We'll get those results in. That will drive the update to the resource that is part of our pre-feasibility study. Of course, the pre-feasibility study is focused on the heap leach phase of the project only. And that's something that we can do very handedly within our existing team, with our existing personnel. It's something that's straightforward to deliver on. 70 plus or minus 1,000 ounces a year of gold, Our PEA capital was about $100 million. We would expect to be in that order of magnitude for the PFS, and then we'll march forward with our re-permitting of the site. Meanwhile, we're continuing to explore that second phase of the project, which is the sulfides, the high grades we're seeing in the underground, deposits still open in all directions. Very exciting 2023 coming for Revival Gold.
When you write here the feasibility study and heap leach restart 65 to 75,000 ounces per year, within that time frame, 2023 to 2026, when do you think you really can pour the first gold?
2025, end of 2025 is our objective. It's the nice thing about the site is we understand it very well. The setup's there. We know how the process works. The permitting has been done before, so the regulators understand how our water treatment, how our land organization works. And so our objective is to be producing gold by the end of 2025. We'll be able to say more definitively about the timelines once we complete the PFS, because that puts the pin in the footprint of the site as we'll construct. And of course, as we find more gold, the footprint changes. So we want to make sure we button that down before we go into our re-permitting exercise, and that's mid next year.
Okay, super. And have I got that correct? For the heap leach restart, that's $100 million, you said?
That was the PEA capital.
A number.
Yes.
And but it might be now higher because with the inflation and everything?
Yeah, I think people are expecting all capital numbers to go up. I would just say, we're working on fine-tuning our arrangements. I don't expect a big jump in the capital from what we see right now. Definitely we're feeling inflation, but remember, the major components of inflation are around materials, and we've already got the concrete, the steel in place for the ADR facility. So we're not going to see a lot of inflation around that. Yes, we'll see inflation around our OPEX from fuel costs and labor costs, but I think we can manage this much better than if this was a greenfield site where we're starting from scratch.
Absolutely. Yeah. And also what we have discussed already infrastructure-wise, it looks fantastic for you guys. That also saves time and money. Let's come to the mill phase PEA. When do you think you will have then the feasibility for the mill phase probably? And when do you think you could start it, and how much capital would be, just a guessing, I know, forward-looking statement, but what do you think you need to have in addition, or could you finance it out of cash flow?
It's a big project, but the thing that's really exciting about that is it's attracting all the big players. And I think if my colleague Steve Priestmeyer was with me here, our VP Exploration, he would say to you, we've got a lot more exploration to do here. The deposits are open in all directions. We're finding a lot more of this high grade. It's changing our views of the deposit. I mean, initially we thought we'd go from open pit heap leach to open pit mill. And now we're thinking maybe there's an interim step where we go underground with high grade production. And then at the tail end of the mine life, we go into the open pit mill phase. So still lots of exploration to be done before we start pinning this project down. It's open in all directions, and we're finding more gold.
That's always good, finding more gold. Super. Yeah. Anything else there?
No, I think that's it. Except, of course, our value, which
way too cheap, I would say.
I think as people start to put their arms around how much we really have here, and it starts to sink in. We've stood up very well from a value point of view relative to our peers over the last 12 months, 18 months. I think we've outperformed most of our peers. And I think there's much more that will come. We're pretty steady in what we do and in terms of how we approach the project. So we're no flash in the pan, I would say. The future's looking very bright for the company. We've got a lot of upside. I'd say grade really matters, and we're finding lots of it. And if you look at what the premium takeovers have been in the United States, so this is safe geography, you're looking at transactions, north of 20 to 40% premiums for those companies, $40 to $100 per ounce paid for those companies. We're at $8 to $10 an ounce right now. A lot of upside in the stock. We do have a lot of work to do, but I think we're in a good jurisdiction. We've got cash and we've got the team to deliver.
Fantastic. Super. That sounds great to me. Let's stop that here. Fantastic. Yeah, thanks for the presentation, first of all. But what you said, you got also cash. So how much cash is in the bank? How long will that last?
Yeah, so we ended the last quarter at about 7 million Canadian. And that'll take us through the programs this year and into next year. We will look to do a financing at some point in 2023, but we can choose our timing. And the drilling is heavy part of the drilling spend is coming up. Will be finished in about a month's time. Our burn rate, G&A burn rates are running at about 2 million Canadian a year. So we can be flexible on our other spends. Remember, we've completed all of our earn-in obligations with respect to the Arnett side of the property. We're well ahead on our Beartrack side of the property. So we've got lots of flexibility. If we're in a bad market early next year, we can give ourselves more time. And I think we'll have a lot of results out between now and then. So it's going to be a busy season.
Okay, super. I also saw you had a press release on 14 September that you have completed the acquisition of the ACE mineral claims. Maybe you can say some words on that, please.
Yeah, so you'll recall we've got some pretty exciting soil anomalies at the Arnett Creek. The ACE claims were that we completed the purchase on were part and parcel of our Arnett block of property. We wanted to get that done before we got out and do some more drilling because, of course, we want to make sure we own 100% of that property before we start adding value to it. And that's now behind us. And as I mentioned earlier, we have 100% of the Arnett block of the property. That's that left branch of our property position now. And we'll be out drilling on those soil geochem anomalies, which we were not able to see just earlier in 2023. So lots more exploration, and for oxide material close to surface, complementary with that first phase project.
Super. Perfect. Sounds like a good game plan. Hugh, thank you very much for the update. Appreciate it. And I would say just let the drills turn and flush us with good results.
Thanks,
it would be fantastic. Thank you very much, Hugh. Yeah, ladies and gentlemen, that was Hugh Agro, the CEO of Revival Gold, and you heard it. Lots going on with the company. I think that was a great update. The guys are spending wisely their money and adding value to the company. Great drill results, really fantastic, very close to surface. And I like that they can start with a heap leach open pit scenario. Also, lots of room for underground mining later on, and also with the investment of approximately maybe $120 million to start a production here, that is really makeable. And I think the company is in fantastic shape, but definitely heavily undervalued. You should have a look on Revival Gold. Thanks for watching us, and bye-bye from Switzerland.